Yes. Hello everyone and welcome to another video. So in this video, it's going to be about introduction to fair value gaps. If you're a trader who still doesn't really understand fair value gaps well and don't know how to use them, this video is going to be for you. And without wasting time, let's get into it. Now, in trading, a fair value gap is it's a concept that is primarily used by price action traders and over order flow analysis traders, often associated with ICT. Actually, ICT is the author of fair value gaps, and even the SMC, the smart money concept traders, also use the fair value gap. So what is a fair value gap? So a fair value gap occurs when there is an imbalance between buying and selling pressure, creating a gap in price where efficient trade did not take place. Now, this typically appears in three candles pattern on the chart, where the first candle uh, makes a strong move in one direction, okay, like this one here, in one direction. The second candle gaps down, okay, leaving a gap in between. And now the third candle continues the trend of going lower. I want us to, take a look at this again. I don't want it to be too complicated. I want to go with a pace whereby you guys can really understand this thing, okay? So a fair value gap occurs where there's an imbalance between buying and selling pressure. Remember, it has to be either buying or selling pressure. So that's where we're going to be having a bullish fair value gap and a bearish fair value gap. We are going to be going into that. And the example I'm going to be using right now is a bearish fair value gap. At this point, I do believe and hope that you understand what a bearish market is. A bearish simply means that we are selling, we're going down, okay? So, for example, a bearish fair value gap is going to be created whereby there is imbalance between the selling pressure and creating a gap in price where price did not take, where efficient trade did not take place here, meaning that some traders were left out in this trade or some orders were not filled and price just rushed down. You see, leaving this inefficiency here. Now, for a fair value gap to be created, there have to be three candles. The first candle, second candle, and third candle. And now this is what I was talking about. Now the first candle makes a strong move in one direction. For example, this one, this bearish candle. As you can see, the cells were making a strong move here, okay, in one direction. It came and gave us that wick there, that low, okay. Then the second candle, which is this one now, continues the trend or gaps down. Gapping down, it is that displacement. As you can see, it has displaced below this candle here. This second candle has displaced below this first candle here. And as you can see, that aggressive displacement, leaving behind a gap in price action. Okay? Now, the third candle continues the trend, which is this one, in going down or going lower, confirming the imbalance. Now, without the third candle, we don't have the imbalance, or we don't have the fair value gap. So the fair value gap is being created with three candles. The first candle being the one that makes a strong move in one direction, like this one. The second one continues the trend of displacing below the first candle, leaving behind a space or a gap. Then the third candle, which is this one now, confirms the what? The gap or the space in between the price action. So if we can mark it, so if you can see, if we mark the low of the first candle, remember this is a bearish market and this is a bearish fair value gap. This is the mid gap or the second gap, which displaced to give us that question of that gap, and this is now the third one which confirmed. So what we have here, let me use this tool. What we do have in here is what we call a fair value gap. What we do have in here, this is what we call a fair value gap, this one here. Now, this is on a bearish situation. I would like us to continue and spot another fair value gap on another now bullish market. Remember, this is Nasdaq chart. So this is our first candle, for example, And you see, for a fair value gap to be formed, you just have to wait until it's formed. It's not something you're gonna just pick up randomly. You have to understand what a fair value gap and how they are formed. So, for example, this is let's start with this one. Let's start with this one here. Let's start with this one. So, for example, we have this candle. The first one, it makes a strong move in one direction, but unfortunately this one we just closed back in from the other one. But now actually the second candle is the most important one, because you see the second candle has to displace above or below, now followed by the third candle continuing or confirming the trend. So for example, the second candle here displaces above this candle, the first candle here. Now let's mark the high. Remember, this is now a bullish fair value gap. Okay. And you see another easy way to spot bullish and bearish fair value gap is just even just use the colors. Like if you really have an issue, knowing a bearish, just use the colors. When you see the red, for example, red, is for sales, like that's for bear. Okay. When you see the sales, automatically a fair value gap created by three red candles, that is like more than two red candles, that is a bearish one. A fair value gap created by, like for example this one, a fair value gap created by more than two or more than one, for example this one here and this one here, we have two green candles here, that's a bullish one. So this just to 12 traders who are having issues like identifying bullish or bearish fair value gaps. Okay, so for example, this is our first candle here. The second candle comes in aggressively and displaces or gaps up. Okay, leaving a gap in price action. It created a gap here because, as you can see, this candle left a gap from the last. For example, this is the high of this candle from the last high of the previous candle. As you can see now, we gapped up or we created this gap. Then the third candle, instead of third candle coming and closing this one here, because this gap is supposed, for efficient price movement, price has to come down and even at least wick on the previous first candle before the second one. But unfortunately, that did not happen. Now it went higher and closed above here. And this was the low. So the low was supposed to be either somewhere wicking this candle here, but unfortunately that did not happen. So it also confirmed like a creation of that gap. So we have the low of the third candle, we have the high of the first candle, and this is the body, or this is the gap now we have created by the second candle, which is the middle one. So here we have our bullish candle. What this literally means is that price did not give efficiency or did not give efficient trade to take place, meaning that there were some orders that are not filled here, and these orders, when they are not filled here, price has to come back later to refill them. Okay, now in other term, this gap represents an area where price did not facilitate a fair trade, meaning that there were some people who were not filled. This was not fair. So it has to come back and rebalance that inefficiency so that we can have a fair trade. So later on, this gap will be filled. So often it usually leaves those gaps open for them later to be filled on specific time. Okay. Now, let's talk about a bullish fair value gaps. Now, a bullish fair value gap, like the ones we're having, in bullish, sorry, the ones we have in just right before us. Okay, so a bullish fair value gap is like, for example, it occurs when price gaps up, indicating a strong buying pressure. For example, we gapped up here, leaving this gap behind. This shows that strong buying pressure, and as well as this one here too. This one here, that's a bullish fair value gap, as you can see. So we had this first candle, okay? Second candle come and displaces above it. After displacing above it, we expect the third candle to come and rebalance, but it does not come to rebalance or even touch the wick of the first candle, leaving this gap behind. Now, these are bullish fair value gap. Now, price will always want to come back to this area to rebalance because it did not offer a fair price. Okay, like a fair price during or a fair trading during this period here, and that is the same way this candle, this fair value gap was also created. This one here, okay, we had the first candle here, the second candle comes in, displaces above it. After displacing above it, you expect the third candle to come and touch, or at least rebalance onto these wicks, but unfortunately it does not do that. So it leaves a fair value gap here behind. This is a fair value gap, and these are bullish fair value gaps. Okay. On the other hand, a bearish fair value gap now occurs when price, when when price gaps down. It gaps down, indicating a strong selling pressure. For example, this one that we just used here, it gapped down. The second candle gapped down based on the first candle. And now the third candle gave us the confirmation of formation of that bearish gap because it did not touch the wick of the previous candle. You see that? And as you can see here, price came back to reprice it. As you can see, this one here. Later on, this candle came in and repriced that bearish fair value gap. So meaning that it came to tap in traders that were left out. So for example, some traders would have short or entered their trades from that gap in there, put their stop loss above there, and maybe they target their 1 to 1, 1 to 2. Like for example, 1 to 2, you see that was already 1 to 2 R. Okay, so that is just how to use them. So in the next episode, I'll be going deeper into how to trade fair value gaps and how to note which ones which are going to fail and which ones to use. Okay, so this is going to be it for this video. I hope this was helpful. So in case you have any questions or you have anything that you'd like me to cover, you can let me know in the comment section. Make sure to like, subscribe, and share with a friend who is interested in trading and enhancing their tradings, or a friend who doesn't know about fair value gaps. And see you in the next one. Bye.